Hey, hope everyone is well. It's actually nice to be back. I have had pretty much a quiet weekend, not too much focused on the charts, so I would always actually recommend anyone who likes to trade, whether it's a day job, day trader, or whether you're just doing it as more of a hobby and you have a keen interest, that you should try to get some rest from the charts, because it's not always good for the mental capacity, let's just say. Want to get ready for the week ahead. It's Sunday, and in the UK, these are all UK based times, so we're currently looking at Forex Factory, so just mapping out and kind of understanding what are the key impactful financial fundamentals that can effectively cause anything within the charts to move with high volume and volatility. So the red indicates the large impact, the orange signifies kind of a medium impact, and then the yellow signifies a low impact. Let's just go through the red ones just to give us a sense of what's coming up. So we've got the FOMC meeting minutes, which is good to look at because it gives you an insight into how the kind of meeting came up with the decision for the rate hikes and what they want to do. So this is currently in my time in the UK, so you'll have to change that to whatever your time if you're from the States or Asia or whatever, but this is 7 p.m. on Wednesday. Monday, nothing too much. Tuesday, not an awful lot, although we do have the US flash PMI. Now they normally have these in two versions. They have the flash and the final, so above 50 will indicate industry expansion, which is obviously good, at least good for the economy, not so much if you're shorting as an example and your bias is to go down, then that's not a good. So actually what I say here is if actual is less than forecast, it's good for crypto. So above 50 indicates industry expansion, below indicates contraction, and there's two versions of this report released about a week apart. Like I say, it's the flash and the final. The flash release, which the source first reported in November 2013, is the earliest and thus tends to have the most impact. So the flash is the one that seems to create the most impact within the markets. So that's on Wednesday. My time, that's just after the markets have opened, actually 15 minutes after the markets have opened. So the minutes, like I said, that's on Wednesday. FOMC, and again, that's just people who are trading, they like to kind of see how they came up with the decision. So the minutes give an indication of what players are hawkish, which ones are more dovish, and what that can kind of mean, and how they've come up with the ultimate decision. And what they're trying to look for is how much of an impact does Jerome Powell have in terms of his commentary, and what can we deduce or infer from any kind of decision that was made to try and predict what the future outcome might be. Then on the Thursday, we've got the US preliminary GDP quarter on quarter. So again, they're anticipating no move up or down, no growth, but no contraction either. Again, G20 meetings may be significant, may not, we just don't know. Friday, we have the US core PCE price index. Now for me, I think this is probably the most important one that Jerome Powell and the gang look at rather than CPI. CPI is important, but I think it's the PCE, which is the one that they use because it's different from core. So for example, it differs from core CPI in that it only measures goods and services targeted towards and consumed by individuals. Prices are weighted according to total expenditure per item, which gives important insight into consumer spending behavior. CPI is released about 10 days earlier and tends to garner most attention. Again, what are we looking for? So 0.4 is what we're predicting. So we're actually predicting a slight increase in terms of the index price. So last month it was 0.3, they're predicting 0.4. Anything below 0.3 or 0.4 rather will be significant in terms of price movement. So if actual is less than the forecast, it is good for crypto. So if we come in less than 0.4 or even less than 0.3, we should anticipate some pretty significant moves. If it comes in greater than 0.4, as in higher, then the PCE that does go up month on month, then that means there is less appetite for safe, let's say, non-risk assets or off-risk assets, and more appetite for risk assets. So in terms of what we're trying to do is, we're looking forward for the week, and we're looking at what will provide us any kind of volatility. What can we expect that to look like? So we're going to move back into the charts and let's have a look what we can see. Okay, so moving over to the charts now. If we just open up Trading View, you can see the thing we want to try to determine is what is the likelihood of any move based upon what the news events can prepare us for. So I want to just go to the weekly time frame real quick, and I just want to move this out a little bit, and let's see what a typical move can look like. I mean, this isn't any kind of move here. I think maybe the PCE can be a significant one. I also think the minutes can sometimes be significant, but if we look what the average move is in a week, because what we want to do here is kind of predict what the movement might look like. Now if you look even just here, I'm just going to map this out, that could be like, so I'm thinking about like an Elliott wave here. So that's 0.1, there's your retracement, Then you have your significant move to the upside, followed by a move to the downside, and then an impulsive move for your fifth wave. So we could still move up for sure. We still have the capacity to move up, because although this is an impulsive candle, it's only one candle, you know, at that. So right now, you know, depending on how we move, we could certainly anticipate a move to the upside. But from our perspective, it's kind of trying to figure out, well, how much can we move up and what would that look like? So let's just bring up our price action a second. So, you know, this one was a pretty significant move. This was 4,418. That was quite a large move in terms of the full week in which it ran. But then also we can look, we've got, you know, this one here, which was 5,600, just shy of. Again, another significant candle, 4,000. I'm just looking at the kind of the much larger ones. So roughly on average, you're looking about a 5,000 point average move for the larger ones anyway. So if we were to anticipate moving to the upside, and let's say on average we could, since June 22, you know, the biggest candle we had was this, which was, you know, just nearly 6,000. Let me just double check that one more time. Yeah, just over 5,600, 700, something like that. So if we were to move up again to that kind of leg, you know, that would take us to 29k, maybe even more, if we do this within a 1 week period. But I don't think there's enough surprises in the news to create that. So I just want to know, for me, what can we expect in a week, you know, in terms of if we are going to move up. I mean, right now, as you can see, this is becoming a really stubborn area to get past. And although we've broken it with a small amount of liquidity as a liquidity grab, it's really not, it's not done enough for liquidity grab for me. So it needs a lot more of a push to the upside. Problem is, if the PCA comes in high, I think that will be a problem for crypto. So we'll have to see what that happens there. If there's anything from the minutes that indicates a more hawkish stance, again, that could have significant impact on the markets of crypto as well. Of course, this doesn't bring into effect anything that could happen outside of the usual, so things like Black Swan events and stuff. So again, now that we know, you know, we can expect probably somewhere in that 4,000k rate, 4,000 basis point range, maybe somewhere around that. Just if we just base it purely on price action and not that normally creates a lot of friction, like CPI. Like rate hike increases and stuff like that, that's quite a significant impact. So, but like I said before, I want to just map out where we are with stuff. So I could probably suggest right now, it feels like if this is one move to the upside here, then this would be two. I think we had a huge impulsive move for three, we come down for four, and now we could argue a four that's, you know, five, or whether we're in some sort of an ABC correction now from this previous Elliott wave. Or, you know, are we going to continue this fifth wave so it could be a little bit higher? And that's what we kind of want to determine. So we don't know is the honest answer, but we need to be prepared either way. Just going to bring on my pivot points. Okay, so looking at the pivot points again, you know, this has taken this whole week now. Interestingly enough, we crashed through. So this is the pivot. Yeah, so resistance level 1 was at 23k. You know, we came out just, let me just zoom right in here so we can really see this. And you can see we hit through the pivot point, we smashed through our 1, we literally smashed through our 2, and then we kind of just went above our 3 as our point at which we couldn't really get too much past. Although we did close above it, but the bearish candle took us back down, and we smashed that back down below. Of course, where do we come back up to? Right to the peak of R3. So realistically, it's like, okay, by the end of this candle, I mean, right here is where we're going to start a new set of pivots. So we'll get to see what the new pivots are on Sunday. So I'm keen to see how they are being respected. But right now, as I say, it looks like we went up to R3 as the total. Whether we want to move up or down, I don't know, but I'll be paying close attention to those pivot points for next week, because I want to know whereabouts it's likely we are going to go, because I can't really make too much of a case at the moment for anything other than that this has been the fifth wave. Could argue that goes there, this at the moment goes here. 1, 2, 3, 4, 5, and that's a 5 wave within another wave. So if we take this as wave 1 to here, this is wave 2, impulsive wave 3, back down for wave 4, and then finish off with wave 5. So then you're looking for an ABC correction. So is A down to here, B up to here, and then C right now is looking a little bit choppy and wavy. Now that would normally indicate that we are ready for a new early 5 wave. The problem is corrections can be really messy. Sometimes they can be nice and you don't really know that it's a correction until you see everything, you know, after the fact. It's normally, you know, you have to look back in time to figure out what the correction actually was, because sometimes it can be a triangle, sometimes it can be flat, sometimes it can be zigzag. But if I'm looking like, if this is a kind of a more macro based Elliott wave, so yeah, from 0 to 1, 1 to 2, 2 to 3, and then 3 to 4, 4 to 5. I've got 5 waves in the final, and that looks like an ABC correction, as what we call a zigzag ABC, so it would make sense. Okay, so in terms of where we are for some key levels now, so let's just get rid of the pivot points, go to the daily, right? Let's see, let's mark out, make sure we've got all our dailies marked out for significant and key levels. So if I bring on the daily, you'll see we've already got some of these marked out, but we do definitely have some new ones. So let's put our magnet tool on. You guys should know the drill by now. And here is a daily here. Now these are, if you're new to the channel or you're not really seeing why we're doing these are really powerful points where they get respected because it's a significant time frame. So right now we're on a daily levels, so from a significant perspective we usually see some sort of reaction around these levels. So without looking at the TA, you'd expect some sort of a bounce or some sort of activity. If they don't, if this doesn't get respected, it will absolutely thrash through this to the downside. So you're looking for reaction basically from these. Okay, what about weekly? Let's look at our weekly levels now. I've got to go into the weekly time frame. No, well, we won't provide a new weekly candle until tomorrow, actually, or tonight. So I'm going to get rid of this one because this one is more recent. Okay, not bothered too much about down there, that's fine. And then monthly, again, we shouldn't have anything on monthly new, so let's go to our monthly time frame. Yeah, 1, 2, 3, 4, yeah, that's fine. This weekly here should not be here. Just mapping things out a little bit. Let's go back to, let's do the 12 hour. Just want to check my crab harmonic real. Yeah, that's the point there, 1.619. Close enough, but let's just see what kind of reaction. This is a super bearish pattern, by the way. So as I'm looking right now, it looks like we've kind of topped out into a 5 wave. The only concern I've got is that for me, the liquidity grab was just, it was too weak. It needs to be more. I wanted to see a lot more liquidity being taken above this key level here. Just going to zoom out a little bit just to give you a bit more show and tell on this. But if I look at liquidity levels, so we can see the point at which we mapped out, for me, it's not enough liquidity. I wanted to see this really thrash through, maybe come up to as high as, you know, 25,500, maybe even a bit more. Fill in some of these imbalances. You know, this is a huge imbalance, which I believe is on the daily time frame. I'm not going to look at that, but I think it's the daily time frame which this imbalance is on. Again, it would be nice for this wick to have come at least 50% of the way up here. So 26k would have been a nice move to the upside to expect, you know, effectively a nice retracement back down to the downside, which would have, you know, we can see you've got plenty more imbalances down here as well from this initial pump. So do it seeing how this reaction occurs. Again, from a liquidity perspective, just not enough in my opinion, which is why I think we can certainly anticipate still a move to the upside. The other thing I can start to see here is a parallel channel building. Now I'm going to take that off. Let's just see if we can get this from this point here. That's just a little bit too not good enough at the moment. Let me just take the extension off. Let's see if we can just tidy this up a little bit. I'm looking for touch points. Now these are effectively what I would call, if we're just seeing a wick, liquidity grabs. Yeah, just a liquidity grab above that parallel channel, and just right now we're still respecting a parallel channel, as it were. So I'm going to leave that on and just monitor how it goes. Now look, one of the things you've got to be mindful of is everyone who's looking to short at these levels are going to have the stop losses relatively close. So each time when you see these wicks here, these are just engineered patterns. This whole channel will be an engineered pattern by market makers to construct an idea that you think as a retail, yeah, I'm gonna, you know, nice short opportunity. That's great, but eventually you will see that these will get, you know, capitulated. So, you know, if this price starts to come up to here now, you'll get a stop, you'll get a, you know, potential Oh, that looks like a little smiley face. Anyway, you'll see a load of stop losses here. Price might come back down, maybe come to the heart line, and then crash back through again. So eventually, these things, specifically if we're in a momentum, we are moving to the upside, just be careful just thinking that we're going to come and crash back down, because although all the signs are pointing to the fact that we should start seeing a retracement, it just doesn't seem to be moving down at all. If anything, it's more corrective, so we're still moving up, you know, and that's what the start of a bull run looks like. When I say the start, I mean, would have been nice to have got in at these levels, but anyway. Right, so what are we on now? So let me just see, parallel channel, I'll leave that there. Next thing I want to see right now is some volume zones. So next key volume zone is right up at that 29,930k, we can just say. But you can see, spent a lot of time around this 23,200 zone, which was key. Whether we come back down and test this for one more time before we move to the upside, yeah, come back down, retest it, use this as a base to springboard from. But it's, you know, looking like now it's going to be interesting, because I think this is a key level that it's really got to break through. And even though, like I said before, we did get that liquidity grab, it wasn't good enough. So I think, yeah, move to the upside, certainly possible. More of a liquidity grab, come back down, retest this zone, keeping in line with these lows here. So obviously having that parallel channel. But then the other thing that I think is probably worth just having on will be to map out this as a second line of support, because, you know, I could see quite easily, just from a TA perspective, that we've had this move that we've seen come down and test this zone twice, but it's in line, and you can see again, these are all engineered constructions, and it's just the way it is, but you can see that we could come down quite nicely, test this zone, and then move to the upside, because we've got a bit of confluence here. We've got a volume zone, but we've also got this ascending, let's say, support line here down at that bottom, which isn't quite the parallel channel, but it's enough to get people who will miss out on a position, because they're anticipating that the price might come down here. Now, what can happen actually, and I'm just going to remove these a little quick second, is we could see another thing that might occur is, you know, if we take, let's take the bottom to the top, right? So you could see right now we are at the 0.382. The problem is right now we've not seen any retracement. It's significant enough. Now for me, this golden pocket would be a perfect place to come back down to, simply because, number one, it's the it's the point of control of the entire Bitcoin price action, but it's also the golden pocket for, you know, where we are now from a price. So, you know, in terms of making a case for the bulls and the bears, I can see two scenarios. From a bearish standpoint, which is actually still bullish, even if we come back down and kind of do something like this, hit this point here and then hit to the upside. In the shorter term, it's bearish, but actually it's still very bullish in terms of the main price action. It would still be a kind of more macro based bullish outcome. So I'm going to be keeping my eyes peeled on what we can see. You know, this, like I said, I think I deleted that accidentally, but I think this is something to keep your mind's eye on, because I could seriously anticipate putting in a long order here. I would never be long in here, no chance. It's just it's not a good area of value at all. I wouldn't think that would be kind of worth looking at. One of the things that we can anticipate actually, and I want to just see if this is different from my other parallel channel, because the parallel channel that I drew here, if I just remember what that was, is there, but we can see another parallel channel that's building as well here. And these are always, I think, always worth having on, because right now, from our perspective, we want to see what the market is trying to construct from a position of patterns. Even though we're not pattern watchers and pattern followers, what we do want is to know where are these places of liquidity and where can we expect to come back down to. So right now, this is the liquidity zone all here. This is another liquidity zone here. You know, if I'm looking for longs and shorts, I'm looking at these zones, because these are, you know, where we can expect some sort of reaction. So supply, demand, all of that kind of good stuff. You could also just do it like this. Oh, that's your, even though you've got your parallel channel, this is actually your scaled short. So you'd put a scale short in here, maybe go a little tiny bit longer. So effectively that would be the heart line, yeah, for the biggest peak, to another parallel channel. With good risk management, that's not a bad opportunity in terms of where you could look to long from. But that's obviously a longer way down. I think if this has got any kind of real bullish momentum about it, we do need to see some sort of retracement, just because in my opinion it's too bullish. Even this, that was very little of a retracement. If anything, we've come back to the 382. You want to see at least 0.5, even golden pocket. Confluence around that golden pocket is obviously, you've got that point of control. So that's what I want to see move, but we haven't got that yet. So if we were to look at a 5,000 basis point move over the next week, what could we anticipate? Can we hit this zone here? Let's have a look. Yep, absolutely. Now, how about if we were to move a similar point? So we've seen in a week we can move easily 4,000 or 5,000 basis points. No problem at all. What about that to the downside? I even think, yeah, we could even come down there. One thing I would say, there's something similar that will bring us down to that next zone of retracement for volume. These volume zones, incidentally, these are where most volume is being traded, and you can see oftentimes between the zones we get this really fast price movement, but on the zone we get sticky. That's because there's a lot of liquidity there, less risk for price slippage or price impact, which is why market makers like to cash in these areas. We see these big moves in between them. Right, I think for me, my plan for this week, I'm going to be looking at these zones. I think I'd like to see push to the upside, right? Simply because for me, you need to see more liquidity being taken at this zone. I just think it's not enough from what that is. So I think we still need to get a lot of longs wrecked who are getting trapped here. So I'm going to be building some shorts up at this point. I'll be taking profit kind of in this middle zone if it wants to come back down, but then I'd be looking kind of the bottom of this channel here in this area. This is going to be a sliding scale depending on where we are within that week, but I'm going to be aiming for here. If we go past here, simply invalidate that move. I'll be looking at this next zone, and then I'd be really looking to ape in hard if we come as low as the point of control, which I can't see as, although it's possible, I just can't see us coming down to this level. I think if anything, if you was to say, okay, what do we think will happen? Well, everyone has the idea that these are going to be, areas of demand and supply and stuff like that. But actually, if the market wants to wreck more people, then we could come down to this zone here. So I think, based on the fact that we can look in a 7-day period, we normally average around 4,500, 5,000 basis points move one way or the other way, from top to bottom, from high to low. Making a case for the bulls, that would put us around the 30k mark if we were to continue to push up. However, to the downside, we're looking more like back down to 21, something like that, if that is the case. If we were to say, well, which way is it going to be? Apex, is it going to be up? Is it going to be down? That, my friends, no one has the answer to, because we just don't know. But the only thing I would say is, structurally, what I would guess might happen, and it is a guess, is we are looking very much like we've finished off 5 waves. Very much like we finished off 5 waves, which is here, right? But this 5th wave may be a bit more impulsive, take us up, claim some liquidity, finish off the job before we start to move back down quite aggressively. That's, for me, what I think could happen. So still a push to the upside in the short term, and then come back down and start to claim some liquidity a bit further down the channel. So let's just see what happens. But with that being said, I'll leave this one there, and if I've got anything important to say throughout the week, I will come back on. But in the meantime, have a lovely week, and I shall see you guys in the next one.